Everybody wants to buy real estate. It is awesome, and you want to buy real estate too, but maybe you live in a very expensive market and you're not sure if it makes sense or if you actually want to buy here, or you're looking at these other numbers in these Midwest areas or places that are far cheaper and you're thinking, maybe I'll just buy there because it's a lot less and maybe it's easier to get into. So in today's video, I'm going to go over the pros and cons of expensive versus cheap real estate. What's up guys, it's Avery here. If you're new to the channel, I'm someone who likes to save a lot of my money and then invest a majority of it into real estate, which is why I'm going to go over the options of investing in a cheap market versus an expensive market and how it may work for your personal situation. If that sounds cool to you, make sure you stick through the end of the video so you can get some thoughts on which type of market you should invest in. But first, make sure you go ahead, scroll down and click that like button, and then we can get into it. The first thing to think about when looking at expensive or cheap real estate would be the actual cost of the property. Usually the price of property is much higher in coastal and more in-demand cities versus the Midwest or other areas. So these properties are going to be worth a lot more. And the very first property that I ever bought was in the Boston area, and it was definitely more expensive than some duplex or triplex that you could find somewhere in the Midwest. But the thing about cost to get into it and cost to operate can actually surprise you when it comes to expensive versus cheap real estate. If you're investing in your local market, you could find yourself buying a 2 to 4 unit multifamily property or a single family that you could finish out the garage or basement or some other space that you could rent out, and then you could get in with an owner occupied loan. And you can do so with either 3% or 3.5% down, and that allow you to get into that property with a lot less money than if you were to invest out of state in a cheaper property. My example goes as the following, that I bought a $525,000 property with 3.5% down or $18,000. The alternative would be that I could only buy a $100,000, even less than a $100,000 property with that same down payment, because I would have had to put somewhere between 20 to 25% down. Even though your expensive market may be more expensive, you have more ability to get in there because you can have these owner-occupied investments. And when you're starting out, I think the best investment that you could make is through a house hack. And if you want to learn more about that, go ahead, scroll down and check out my free ebook all about house hacking. And it allows you to get into real estate for not very much money and make a ton of gains in your wealth. And so the difference here is that with that cheap real estate, your down payments can be a lot higher. And with the expensive real estate in the market that you're in, your down payment can be a lot lower. But not only that, when you're buying a property out of state or out of your area, you're going to have much higher closing costs. Investment properties have a lot higher closing costs than a primary residence. When you go ahead and buy a property with an FHA loan, like a duplex that you live in and rent out the other side, you're going to have a much lower amount of closing costs as you're getting into the property. Another great thing is when you have an owner-occupied property, your interest rate is going to be a lot less. Banks will just give you worse interest rates as an investment property than they will on your primary residence. So if you're thinking the cost may be a lot less if you go out and find a cheaper market versus an expensive market that you're currently in, that probably isn't actually going to be the case for many people, especially if you take advantage of these low down money options. And if you're not taking advantage of these low down money options, then yes, maybe it does make sense to go to another area because your down payment, closing costs, and other interest rates and other expenses will actually be very similar in both markets, except the actual value of purchase price will obviously be less in the cheaper market. The other thing to think about for cheap versus expensive real estate would be the actual costs. And I just talked about getting into the property, but I'm talking about the costs when you actually have that property. So the cost to repair a roof on a $1 million property versus the cost to repair a roof on a $100,000 property are actually going to be pretty similar. Now there's going to be different labor rates if you're in an expensive market versus a less expensive market, but it's not going to be the same amount of difference between how much you bought the property for versus the amount that you could buy the property for in an expensive market. The difference isn't going to be that great. It's going to be a lot closer in price than you may think. So if you have expensive real estate, you can get more benefits with it going up more in price, bigger rents that can cover these large expenses. But you have really cheap real estate and you're only cash flowing $100 a month or getting $1,000 a month in rent, pretty much the cost of a roof will be an entire year's worth of cash flow. And that leads me on to my third point, is that the amount of money that you can make in expensive real estate is far more than inexpensive real estate. So your cost to get into one and the other could theoretically be the same, but you can make far more money with expensive real estate because 3%, which is the average that properties will appreciate over your lifetime every single year. And yes, it's been a lot more in the last couple of years, but that is an average over your lifetime. A 3% gain on a $1 million property would be $30,000, but a 3% gain on a $100,000 property would only be $3,000. So it's the same percentage gain, but you're obviously getting a lot more from that $1 million property. Same thing goes for rents in these more expensive cities that have a lot of demand. And the reason why things are more expensive is because there is demand and people want to live there. Things are going to go up in price from a rent perspective. More people want to rent there, more people will want to rent from you. It'll make your life easier and you can increase rents a lot more and a lot faster, which can offset a lot of those larger mortgage costs that you may not have at the inexpensive real estate. The other thing from an increase in value perspective is that every single dollar that you put into a desirable or expensive location will be worth a lot more than the amount of dollars that you put into that same cheap real estate. If you're buying a $500,000 property in a $650,000 to $700,000 neighborhood and you put $50,000 worth of work into it to make it look like the other houses, you're going to get a much higher return than if you buy a $100,000 property in a $200,000 neighborhood and you put $50,000 worth of the exact same work into that property in that not as nice neighborhood. You can see how your return and the amount of dollars that you get back versus the dollars that you put in will be a lot less than in these desirable expensive areas. Because in a desirable area, if you have a desirable house, it's going to be even more desirable. The other thing to think about is the fact that if you're going to be buying out of your area is you're not really going to have any sort of boots on the ground. When you're first investing in real estate, there's going to be a lot of things that you don't know and things you might want to learn. And if you can be closer to the property and start understanding stuff, how to work with contractors, how to manage tenants, all of that stuff, that is a lot easier to do when you're close by. It's not impossible to do when it's further away and you'll have to work with property management and figure that kind of stuff out. But if you're new to the game and you want to get a good sense of how to manage properties and how to actually be a good landlord, it's a lot easier when you can drive there if you absolutely had to. And this goes into my fifth point of if you're actually buying a house out of your area, you're probably going to be buying it remotely and you may or may not have ever visited that actual area. And I've actually done this twice now where I've bought a property remotely and hadn't yet visited the area. And it's definitely a little bit more difficult. There's only so much you can know from looking at Google Maps, talking to investors in the area, and learning about specific streets. You can really only know an area so well if you actually just drive around it, walk around it, and feel the area yourself. It's a lot more difficult to get a good sense of it if you don't actually live there. But if you live in an expensive market, you know what areas may be good or bad or up and coming or where some developments may be. There's only so much you can know from information or talking to City Hall without actually walking the area and getting a good gut feel for it yourself. And I think that was most notable when I was moving down to this area in North Carolina. I'm currently living in Durham and it's a great area that is ever expanding and changing quite a bit. But it's pretty crazy. You'll be in some super expensive pockets like the specific neighborhood that I live in, but you may go 2 or 3 blocks the other way and there are people getting murdered and shot up. And it's not like these type of areas will interchange, but if I were looking on Redfin, Zillow, Realtor, whatever it may be, and I see a house here versus seeing a house a couple other blocks away, and I don't know the difference between that, then I may not pick a good place to actually buy that real estate because I don't have a good sense of what the area is actually like. The last thing that I want to mention is that if you have a $1 million property or $100,000 property, no matter what is going on in each of these properties in this expensive or inexpensive area, you're pretty much going to have to do a similar amount of work. So if you're getting $100 in cash flow on this or $1,000 in cash flow on the expensive one, you're probably going to have to do the same amount of managing on either one. Plus, you're going to get a lot more appreciation on the expensive one. So I would much rather have one $1 million property with a couple tenants that I have to worry about than 10 $100,000 properties with a bunch of different groups of tenants I have to worry about, different bank accounts to set up, maybe more property management, multiple handymen, multiple electricians, stuff like that to take care of all of those properties. Because even though real estate will offer you financial freedom and more time back, each property can be a little bit of a headache, so it's definitely something to think about when you're going out and looking at different markets and wanting to buy property. So overall, I've always preferred more expensive real estate rather than just trying to buy really cheap stuff so that you can say you have units, because I don't really care about how many units I have. When I'm going to buy property, all I care about is how much time and how much money is this going to give me back in my life, so I don't have to do things during the day that I don't want to do. And I always find that more expensive real estate is in more desirable areas, which just makes it easier for you to get a return on your investment and increase rents and have better tenants and really all of the things that you want when you're getting into this game. But to each their own. A lot of people buy cheap real estate and do very well. So I want to hear from you guys. Let me know if you'd rather buy more expensive real estate like me, or if you'd rather look elsewhere out of state and buy less expensive real estate. So go ahead, pop that in the comments below. I'd love to hear from you guys. If you made it this far too and you want to learn more about real estate tax saving strategies, how you can pay a lot less money in taxes every single year through investing in real estate, I have a link down below where you can get a free tax strategy session with 1-800-ACCOUNTANT, and you can learn a lot about things that you could do and how you could set up your finances so you can pay a lot less taxes. And if you guys haven't done so already, make sure you go ahead, hit that subscribe button so you don't miss out on any content like this, and that notification bell so you get notified when I make more videos about investing in real estate and other personal finance topics. And if you guys like me here, don't forget to check me out on TikTok as well as Instagram, where I make a lot of the same type of content but in short form. So thanks again for watching, and more wealth is coming your way.